A history of surges. Bitcoin and the power of scarcity. Bitcoin, the first and most well-known cryptocurrency, has a unique characteristic that sets it apart from traditional currencies and other digital assets. Bitcoin has a history of defying expectations. Its price movements have often left both skeptics and enthusiasts in awe. It has surprised many with its resilience and its ability to surge in value. These surges are not just random spikes, they are often driven by underlying economic principles. These surges are not random. They are influenced by a variety of factors, including market demand, investor sentiment, and technological advancements. They are often linked to specific events that influence Bitcoin's supply. One of the most significant events is the Bitcoin halving, which occurs approximately every 4 years. One key factor is the concept of supply shock. This happens when the rate at which new Bitcoins are created is cut in half, reducing the supply of new coins entering the market. When the available supply of Bitcoin is suddenly constrained, its price tends to react strongly. This is because the reduced supply can create a sense of scarcity among investors. This relationship between supply and price is a fundamental economic principle. It is the same principle that governs the prices of commodities like gold and oil. However, Bitcoin throws a unique twist into the equation. Unlike traditional commodities, Bitcoin's supply is governed by a transparent and predictable algorithm. Its supply is not controlled by any central authority or government. This decentralization is one of Bitcoin's most revolutionary features. Instead, it follows a predetermined, transparent algorithm. This algorithm ensures that the supply of Bitcoin is capped at 21 million coins. This makes Bitcoin's price movements even more fascinating to analyze. Investors and analysts alike are constantly trying to predict the next big surge, making Bitcoin a perpetual topic of interest in the financial world. The halving cycle, a predictable supply shock. At the heart of Bitcoin's supply schedule lies the halving cycle. This event is not random, it is meticulously programmed into the Bitcoin protocol. This cycle is a core feature of Bitcoin's code, written into its DNA from the very beginning. Satoshi Nakamoto, the mysterious creator of Bitcoin, designed it this way to ensure scarcity. Every 210,000 blocks mined, an event occurs that sends ripples through the Bitcoin ecosystem. The block reward is halved. This means that the number of new Bitcoins created roughly every 4 years is reduced by 50%. Miners, the lifeblood of the Bitcoin network, are responsible for validating transactions and securing the network. They use powerful computers to solve complex mathematical problems. Their reward for this crucial role is the new Bitcoin released with each block they mine. This reward incentivizes miners to continue their work, maintaining the network's integrity. When the halving occurs, this reward is cut in half, directly impacting the rate at which new Bitcoin enters circulation. This reduction in new supply is a key factor in Bitcoin's economic model. This controlled reduction in supply has historically led to significant price appreciation over time. Investors and analysts closely watch each halving event, anticipating its impact on the market. Echoes of bull runs past, learning from Bitcoin's history. By delving into the past, we can uncover valuable insights that may guide future investment strategies. Examining Bitcoin's past halving cycles reveals a compelling pattern. Each halving event has historically been followed by a significant price surge. In 2012, the first halving saw Bitcoin's price rise from around $12 to over $1,000 in the following year. This marked the beginning of Bitcoin's journey into mainstream awareness. The 2016 halving ignited another bull run, propelling the price from under $700 to nearly $20,000 by December 2017. This period was characterized by unprecedented media coverage and public interest. These historical trends are not merely coincidences, they reflect the underlying economic principles of supply and demand. They underscore the powerful impact of halving events on Bitcoin's price trajectory. Each halving reduces the rate at which new Bitcoins are created, increasing scarcity. As we approach the next halving, expected in 2024, the echoes of these past bull runs are resonating strongly within the Bitcoin community. Investors and analysts alike are speculating on the potential price movements and market dynamics that may follow. Institutional appetite and on-chain signals, reading the market. Today, the Bitcoin market is vastly different than it was in previous halving cycles. Institutional adoption has surged. Major companies, hedge funds, and even some governments are adding Bitcoin to their balance sheets. This influx of institutional capital brings with it a new level of legitimacy and stability to the market. Furthermore, on-chain data, the raw information recorded on the Bitcoin blockchain, paints a bullish picture. Exchange reserves are dwindling, indicating that holders are moving their Bitcoin into cold storage, anticipating long-term price appreciation. Whale activity, the large transactions made by significant Bitcoin holders, also suggests accumulation rather than distribution. A perfect storm macroeconomic trends align for Bitcoin. Zooming out from the specifics of the Bitcoin market, we see a global macroeconomic landscape that is increasingly favorable for Bitcoin's growth. Unprecedented levels of government spending, rising inflation rates, and a growing distrust in traditional financial systems are pushing individuals and institutions alike to seek alternative stores of value. Bitcoin, with its fixed supply, decentralized nature, and censorship-resistant properties, is uniquely positioned to capitalize on these macroeconomic trends. It offers a hedge against inflation, a safe haven from economic turmoil, and a way to participate in a global, permissionless financial system. The future is bright, a new era of value. As we stand on the cusp of Bitcoin's next halving event, all signs point towards a continuation of its historical trend, a surge in price driven by a constrained supply and a growing demand. This time, however, the stage is set for an even more significant breakout. Institutional adoption, strong on-chain signals, and a global macroeconomic backdrop that favors Bitcoin's value proposition all converge to create a perfect storm for a new era of price discovery. Bitcoin is no longer a fringe asset, it is a global force reshaping the financial landscape. The future of money is here, and it is decentralized.